SoFi has the potential to be one of the most disruptive companies in finance over the next decade. But the question is, does the stock still have 10x potential? This is a company that I own in the asymmetric portfolio. Since I covered the stock in 2024, shares are up 60%, so vastly outperforming the market. But shares are also down 35% since their peak just a couple of months ago. So what's the future of the company? Is this a buying opportunity? I'm going to try to dig through that today. If you're interested in a deep dive that I did on SoFi, I'll put a link to that in the show notes. It's on Asymmetric Investing. There's a link on the screen and a link in the show notes to that newsletter. If you want more on 10x stocks, that would be the best place to start. But when looking at SoFi, let's look at the overall numbers. And this is information from FinChat. FinChat's sponsoring this video. And what I like about FinChat, you're going to see this in almost every single one of my videos. They have a complete stock research platform. You can see all of the basic information you need here: market cap, their gross margin, free cash flow change, growth rates, compound annual growth rate over 3, 5, 10 years. All of this is just in a nice quick snapshot. And you can use these great charts. You can see shares are up 61% over the past year. We can look at drawdowns. This is where you can see that 35% drawdown since its peak in January 2025. So just about 2.5 months. And then of course, you've got all of the financials, all the investor relations information, transcripts, what owners are doing. This is really interesting. I think Anthony Noto, 9.8 million shares, a little less than 1% of the shares outstanding. And you can see all the transactions that he's made. He is one of those executives that is actually increasing his stake in SoFi through both open market purchases and also the exercise of options. So phenomenal information here. All of their filings are going to be right here. But I want to focus on the company's financials and some of these segment KPIs that FinChat provides. And the great thing is they have all kinds of segment KPIs. If you want to see what members are doing, how many total products do they have, you can create these great charts. They're going to give you 2 weeks for free for their pro product. That's what I'm using here today. Just go to finchat.io/ASYM. If you decide you want to become a paying user, get 15% off. So really phenomenal deal. Like I said, I use this every single day. It is absolutely the best research tool out there. The 3 areas I want to look at with SoFi is lending, technology, and financial services. So let's start with the lending business. This is really where SoFi started as a business. I call it a Trojan horse company because it got into a bunch of the lending businesses that most banks don't want to be in. Personal loans in particular. Student loans is kind of the second thing that they're in. They're also doing some mortgages, but that's a much smaller business. But you see those originations have really grown, or the lending revenue rather, has grown about 33% on a compound annual basis since 2018. What has changed over this period of time is the strategy that they're bringing to market in the lending business. What SoFi is trying to do with its lending business today is not become a bank and have more deposits on the platform. It is increasing the number of deposits. We'll get to some of their financial services revenue in just a second. But what they're trying to do in the lending business is become more of a platform. So there's 2 ways that they can be a platform. They can originate loans themselves and then sell them or securitize them in the future. The other thing they can do is originate loans on behalf of other financing entities. There's plenty of financing entities out there that just want to make a steady return. That's what they're going to get with something like this loan platform. And that's a growing business. In 2024, 9.1% of their loans were originated on the loan platform. But in the fourth quarter, that actually increased to 15.3%. So this is going to be through deals like they did the $2 billion deal with Fortress Investment Group. So the Fortress says, hey, we're going to put $2 billion. We want to get access to a whole bunch of personal loans. SoFi is going to originate them on their behalf, charge a fee. And then it's Fortress that's actually taking on the risk that are associated with the loans, the default risk, the interest rate risks, all the risks that you would normally have with a banking company. That loan platform business is also growing with a new $5 billion deal from the Blue Owl Capital funds. So I think in the future, that's going to be a bigger piece of the business. They want to grow the number of loans that are available to their customers. Remember, they're a platform company, so they want to have more and more customers on the platform. But to be able to grow, most of the time, banks would have to increase the amount of capital that they have available. You have capital ratios that you need to uphold. So you can't just go out giving out loans willy-nilly if you don't have more capital yourself. That's why as banks grow, they typically have to raise more capital to actually grow the number of loans that they can have. SoFi may not be under that because they're basically originating loans on behalf of other entities. So those 2 deals alone in just the last few months, $7 billion worth of capital going through that loan platform business. They can also securitize these loans, whether you're talking about personal loans or mortgages. So there's ways that SoFi can grow the loan business and continue that growth and the margin expansion that they have in the loan business without taking on more risk on the balance sheet. I think that's really important to think about when you think about SoFi's growth potential. If they're not constrained by their own balance sheet, then they have a lot more growth potential. So I think that's very bullish for the lending business. But the 2 more important businesses that are actually much more leverageable is going to be their technology platform business and financial services. Let's start with Technology services, this is primarily a business that was acquired from Galileo. That's still an operating company, basically a separate subsidiary. Galileo actually provides technology to some of SoFi's products. Particularly, they announced a deal on the commercial side. They want to get more into commercial banking. They're going to be using Galileo's technology for that. So what they do, it's basically all a fee-based business. But if you're going to have a banking solution, so a credit card, a debit card, a savings account, something like that with an institution that's not necessarily a financial institution, this is basically just white labeling that technology and that solution for other companies. So H&R Block, for example, has a savings account that you can hold, a little bit lower savings account than you would get with SoFi, because it's actually SoFi that is white labeling that solution for H&R Block. So they have a lot of partnerships like that. If you have something like a HSA debit card, that may be something that's coming from SoFi. SoFi is actually originating that card because the company that has the HSA is not a financial institution. They don't want to do that as their business. They just want to outsource that to a technology company that's able to do that. SoFi has gotten into that business and it's become a pretty big business for them, $395.2 million in revenue. They just announced a pretty big deal with the government that's going to be taking hold over the next couple of years. I think this is going to be a slow and steady business over the past. Let's move this down here to 2022. You can see that the growth rate, 43% or 42% for a compound annual growth rate. I think that could kick up over the next few years, but I don't have super high expectations for the technology platform business, partly because it relies on other companies coming to SoFi and making a deal with SoFi in that technology side. They have much more in control in the lending business and the financial services business. So let's get to that financial services business, because this is where the real growth is for SoFi. Financial services, I'm going to pull revenue and contribution profit. And the other thing I'm going to do here is show last 12-month results. Here, look at this chart. This is just absolutely crazy. And this shows you the operating leverage that SoFi has in the business. Going back to 2020, September 2020 is the last quarter here. You can see that relatively small financial services business. This is going to be everything from stock trading to credit cards and debit cards and all the fees that are associated with that. So a very scalable business, something that they don't need necessarily a lot more capital on the balance sheet to be able to grow. But look at the leverage that you get once you reach a tipping point and you cross into contribution profit positive. You can see that these margins have increased as growth has increased as well. These are trailing 12-month numbers. The growth rate in 2024, in a lot of cases, was actually almost triple digits in some quarters for financial services. Now, this is a pretty good time in the market. So some of those revenue sources are not going to be quite as strong in the future if stocks drop like they have so far in 2025. They are going to be a little bit beholden to what's going on in the market, but people using the SoFi platform, using the SoFi credit card, using the savings account, all of the products that you have with SoFi Money and all of the other associated things on the SoFi platform, that's what's going to grow the financial services revenue. And this is basically limitless growth. So you want to see where there's 10x potential at SoFi. I think this is a great example of that. Now, they do have competition in this space. I think Robinhood is a really phenomenal competitor here. I own both of these stocks in the asymmetric portfolio. One of the reasons is I think they're both digital first companies, and that gives them an advantage over the incumbents in financial services. Very possible that one of them outperforms the other, but I think both of them are going to outperform the market and outperform traditional financial services companies. That's why I own them in basically a mini basket. So it isn't like there's no competition out there, but I think SoFi is very well positioned. You can see that in the numbers. So the growth potential for SoFi comes from their lending business increasing in size. I think they've already said that they are not giving out a lot of loans that they potentially could because they just didn't have the capital to do it. Now they're opening up that capital. And as they grow and as they have more capital available, they're actually taking less risk on the balance sheet because they're leaning into their loan platform and then the securitization of loans as well. The other growth business is the technology business, very, very scalable. We'll see where that grows, but if that can grow 20, 30% over the next decade, that could be a phenomenal tailwind. And then financial services, that has a lot of momentum, almost triple digit growth there. That growth rate will come down. But as the SoFi platform, and people use the SoFi app for more and more things, this is going to grow. So I think phenomenal tailwinds behind SoFi, but what's the valuation look like? This is where I think there is maybe more questions. Let's look at just a super high level. Price to book value is oftentimes one of the things you're going to look at in the banking sector. You want this to be right around 1 because then banks can earn a return on that capital. Another way to look at it would be their price to earnings multiple, 31 right now. That's a pretty high multiple. But again, let's go back to the company's growth rate. And we look at SoFi has in the last year, 28% growth rate. Not a lot of banks are going to have a 28% growth rate. I'll leave that growth rate up there, but look at the trends in operating income as well. This is operating leverage at work. So SoFi should be getting more profitable as it grows. I think we've really crossed that point where the operating leverage is kicking in for this company. So price earnings multiple of 30, that's pretty high, but with a company that's growing nearly 30% per year and seeing those margins going up, I think that's a pretty reasonable price. Now, can the stock 10x from here? That'd be about $120 per share over the next decade. Yes, I absolutely think it could. I think the fact that they're taking less risk with these changes to the loan business, the basically unbounded growth and the digital advantages that they have in the technology side and financial services, these are things that they're going to be leaning into over the next decade. And they have a fundamentally different cost structure than most of the big banks who still are building branches all around the world. I've seen that here locally, see new branches going up periodically. And I just wonder what in the world these companies are doing, because you have competitors like SoFi and like Robinhood who have just a digital and completely leverageable platform. They don't have to build buildings. They don't have to hire people to sit in those buildings. They're going to see their revenue growth, and SoFi is going to see its revenue growth continue to be very high over the next decade. And those margins are going to increase at the same time. That's why I think this could continue to be a 10x stock. Like I said, if you want more on SoFi, I'll put a link in the show notes to the deep dive that I did on asymmetric investing. Don't forget to sign up there for all of my thoughts and all of my portfolio. Even after the pullback over the last month or two, that portfolio is still beating the market in 2025 after crushing the market in 2024. So love to see you there. And of course, check out finchat.io/ASYM. Like I said, you saw a lot of the tools here, but I'm just scratching the surface of the potential of this platform to provide you all the information that you need to make solid investment decisions. Let me know what you think about SoFi's potential in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next.